Hi there, this is Chris from MoneyHub, and this video looks at travel insurance excesses. We're going to compare 1Cover with Southern Cross and have a look at how the excess chosen can change the policy cost. So if you haven't done so yet, I strongly suggest having a read through our dedicated guide. We keep this up to date all the time, and it's got lots of information about travel insurance excesses. You can find that linked in the description of this video down below. If you have any questions, please do leave us a comment. We love to make sure that our guides are as comprehensive as possible, and that would really help us to just improve it. So I'm going to do two things. I'm going to go through 1Cover and I'm going to go through Southern Cross, and we're going to get a quote for the same type of trip, and you'll just see the different options with the excess. So if I type in Bali, just do that. I'll type us in for a 15-day trip with two travelers both aged 35. This is just an example. And then I'll click on get a quote, and I will see that there are two quote options here. There's the medical only, and then there's the comprehensive policy, and then that the excess is set at $200. You can see that down here. It says choose your excess, and then I'll also get a quote. I'll just ignore that. I'll get a quote from Southern Cross, and this will be very similar speed to get. We just put in that. So we'll put the departure dates, and then we'll do 15th next, and then we'll type in Bali, and that's covered. That's its own one. We'll put next there, and then we'll go two adults, and then 35 and 35. Oh, that's 5. And then we'll go not a member, and then we'll say get a quote. And here we will get a similar thing where you get two plans. One of course is the annual, and then you can choose your excess. So this is where it gets interesting. I'll do it from Southern Cross straight away. So there's three excess options, and it's $0, it's $100, and it's $250. And then with 1Cover, you can see that there are two options. There's $100, and then there's $200. So that means you can't actually buy out the excess. You'll always have to pay a minimum of at least $100, depending on what you choose. So if we chose the $100 option, then it's going to add an extra $40 of cost to the policy. So we should see the $199 or so come to around $237. Of course, there's an online discount on that $40. And so they've knocked off about 5% of it, it looks like. So that becomes $237. And then if I look at how this changes for Southern Cross, if I go for $0, then the excess is, of course, as I said, is $0, but the policy cost only goes up by, it looks like, around $30. Around sort of $18. And then if it's in excess of $250, it drops by about $23. So from that, I would say if you're going to spend, in the ballpark of $250, it's much, much better. Of course, this isn't financial advice, but it seems to be that the $0 excess is much more attractive. So that's a summary there, just to kind of give you an understanding that different insurers will be charging different things, and sometimes it can be worthwhile. Of course, we'd always say, if the excess was $250 and you're prepared to take that risk, and the insurance price drops so much, quite significantly, then that could be financially sensible. But in this case, certainly for this trip, it would seem that the difference between a $250 excess and a $0 excess is around $20 either side. Either side of $100 for an excess, which makes it much more attractive. So thanks very much for watching. If you do have any questions, as I say, let us know. And we're just here to create lots of information around travel insurance to try and make it as transparent as possible. Thanks very much.